I'm Michael Gray, CPA, and this is Financial Insider Weekly. So welcome to our show today. My guest today is Don Pollard, who is a Chartered Life Underwriter, or CLU, and also a Chartered Financial Consultant, which they use CHFC, the initials behind their names. And he's an insurance broker at Advanced Professionals, which is a regional insurance brokerage company headquartered in Northern California, serving about 350 clients. The company offers employee benefits and executive life and disability insurance planning. Don has worked in the insurance industry since 1973, and at Advanced Professionals, he's worked there for 13 years. And he's managed insurance agencies and trained agents. Don is currently the president of the Silicon Valley chapter of the National Association of Insurance and Financial Advisors. Because health care insurance is such a critical area, I devoted some interviews with Don before to discuss healthcare reform. And so we have those posted on our internet site, financialinsiderweekly.com, under past episodes. But today, Don and I are going to focus on health insurance for individuals. And so, Don, thank you for being my guest today.
Thanks, Mike. Great to be here.
Okay. So as we get started, I want to caution our viewers that some rules for medical insurance may vary from state to state. So you need to work with a consultant who's familiar with those state laws. Okay, so I guess with that, we'll just get started with our first question. So Don, when it comes to individuals and health insurance, a lot of people say, don't leave home without it. What do you have to say?
Well, Mike, I would agree generally with the statement that certainly having adequate medical insurance is going to add to a person's peace of mind, and certainly their financial well-being should something unforeseen happen. And we hear statistics every day, and they change every day regarding a huge number of bankruptcies of citizens in our country because of medical insurance bills and expenses that have gotten out of hand that they didn't have anything to handle. So
it's not the insurance itself, it's the medical expenses that they have that maybe they're not insured in anyway.
Yeah,
so they have to come up with a bundle of money in order to pay those bills.
Exactly, and I think there's an interesting caveat there, and that is that insurance companies give you a discount for having insurance when you get your medical care. So, for example, if you're in a network situation, a PPO yes. or an HMO, and you go for a procedure, that procedure is going to cost you less if you're signed up with an insurance policy than it would cost you if you were just somebody off the street, which then again I think compounds and adds to the problem that people face that don't have medical insurance to help them cover some of those bills.
Yeah. So to some degree, medical insurance we're saying that it sort of is a discount program that's wrapped into the policy as well as covering the procedures and so forth.
Yeah, I'm not sure I would call it a discount program, but there are discounts that are negotiated on your behalf as the consumer by the PPO or the HMO or the insurance company with groups of providers. I mean, you hear the terminology network. These are groups of people that have agreed to a reduced price in order to be listed in the network. So you have that situation that you wouldn't be able to deal with on your own. You wouldn't be able to individually negotiate for a wide group of discounts like they do for you.
Okay. Well, these last few years, and actually over time in general, the picture has been changing for individuals related to medical insurance. And as a person that works in that business, maybe you can tell us a little bit about what the changes are that have been happening.
Well, actually, today I'm pretty excited about the changes going on, and I think every individual should be as well. with our healthcare reform law that was passed into law last year, there have already been multiple changes made to the plans that are available. For example, now people are able to keep their dependents on until they're age 26, whether they're in school or not. There's no pre-existing condition exclusion allowed for insuring children under 19 years of age. And of course, the removal of any annual limits that were in the policies, that's all been affected so far. And then preventive care provided at no cost, no co-pays, no co-insurance. These are huge changes, and I think when we get to the place where we have the exchanges operating and operating as they're supposed to operate, then we will have come full circle with the problem that people have getting individual medical insurance today.
Right. So before healthcare reform, what did things look like?
Well, the individual marketplace, at least in California, this is where my experience is, has not been favorable to the consumer because companies have been able to underwrite policies and decline or severely rate up people that were sick, people that really needed the insurance. So those things have built a dysfunctional individual market in California. Now we have the reform coming to play, and parts of that reform have addressed these issues. And in fact, there are some great opportunities today for people to have people that have pre-existing conditions, and they're unable to get insurance or have been unable to get insurance in the past, now have an option and a place to go for that insurance, other than the Mr. Mib board in California, which was the effort that we did as a state to provide a market for uninsurable people that had medical problems that were so severe that no insurance company would take them on at any price. But today, we have a great option in the pre-existing condition insurance plan that was provided for under healthcare reform, which is available to Californians today. And I did a little comparison on that, a little comparison shopping for myself and for you and for any of the people here that would like a copy of that. And the interesting part about it is that this plan provides for insurance and requires that the costs be no more than 100% of the cost that a normally insured person would experience. So as an example, if a person bought an individual policy, an HMO policy from a big provider, nonprofit provider in California, and they were age 55 to 59, the price would be about $950 per month. If you got that policy through the new federal plan, the PCIP plan, that premium would be $624 per month. And if you were forced to go to the high-risk pool that was set up in California, the premium would vary between, for a PPO plan, $1,235 a month, and an HMO plan of $679 a month. So clearly, for people with pre-existing conditions, the playing field is open, and they just need to get out there and see what it means to them individually.
Okay. Now, let's get maybe into a little bit more detail here. So how do health conditions affect your rating, premiums, and the ability to get health insurance?
Well, the medical premiums that are developed by insurance companies are based on what they call experience, which means how much are they going to have to pay out for these particular medical treatment and care versus how much they take in. So clearly you can see that someone that where they're going to pay out $1,500 a month in benefits to the providers, to the doctors and the hospitals and that kind of thing, the premium for that would have to be more than for someone where they were paying out nothing. And so in the past, when they were allowed to pick and choose between people, clearly the ones that had the higher claims were the undesirable folks, and they were not allowed into the pool, if you will. However, today, not only with the access through this PCIP plan, but the medical insurance companies now are kind of loosening up, and they've developed like a 4 or 5 tier system of rating. So there's a standard rate, and then there's a rate if you have a few things wrong, and that's plus 10%, and then they have a plus 20%, that kind of thing. So the market is loosening again. Not sure why, but probably because of the competition from the other.
Okay, so why don't we talk a little bit about what's going to happen in 2014, about how healthcare reform is changing this picture again.
Yeah, so in today we have the PCIP plan.
What does PCIP mean, by the way?
I'm sorry, Preexisting Condition Insurance Plan.
Okay.
It's a federally funded plan, and it's the federal government in the new law set aside $5 billion to help states to provide this plan. The initial allocation to California was roughly $760 million to help us set up this plan. So it's fully funded by the federal government here in California. So we have that as a stopgap from now until 2014, when the exchanges will then come into effect, which will then allow individuals to shop for insurance along with small businesses and large businesses, kind of on the same basis, where they cannot be the rate can't be changed because of pre-existing conditions and anything that they've got going on.
Okay, so maybe you can tell us a little bit about what are the exchanges.
Sure. An exchange is really just a place where providers, which I would say the insurance companies and the HMOs, so the Aetna and Blue Cross, Blue Shield, and Cigna, and those people, would come and provide a plan which, under the exchanges that are required by the Act, have a set level of benefits. So there'll be 4 levels of benefits, and then each insurance company will come in and offer a price for those benefits and any other additional benefits that they want to put in, but they must at least provide the minimum level of benefit for a specified price. And then you and I, the consumer, either you as a small businessman with your employees or me as an individual, would be able to go down to the exchange or on the website, more specifically, and we would be able to see, oh, here's various options and here's various pricing, and make a decision that's best for us based on the information that we have there.
So it'll make more comparable information available, and also sort of standardize to some degree some of the coverage to make each of the plans more comparable in making this decision process.
Yeah, it's interesting you say comparable, because I think that